Perception is strong and sight weak. In strategy, it is important to see distant things as if they were close and take a distanced view of close things. Miyamoto Musashi, sword master, sage, a deep, deep thinker who spent years in meditation thinking about reality. And of course, for us, reality is price movement. That is what we focus on a daily basis. And again, looking at, I love this, it's important to see distant things as if they were close and take a distance view of close things. Ponder on that as we go through today's market. Everything up, and what's up the most? You got it, my friends. What did we tell you to get into, to look for on that practice trade? Yes, it was gold. Okay, we're going to get to that in just a minute. Up almost 4% over the last 2 days. But let's look at the S&P 500 first, up 0.37%. And we take a look at the S&P, and we're going into the third week of up movement. Again, not as strong a week as in prior weeks, but we do see that we have reached a higher high throughout the course of the week. Not quite, not $1, but it was up. The prior week it hit 373. This week 301.13. So not killing anything, I'll tell you that, as far as price movement goes. And we can see that reflected in the price percent oscillator, which is getting flatter. Derivative oscillator still gaining upward momentum. Price is still well above the weekly trend line. Now we'll see more as we look at the 2-day and all. This is where you see, now remember, the last 2-day chart had ended on Tuesday. So this is a full candle now. It's half candle yesterday. It represents Wednesday and Thursday, and we can see price trying to push through the 2-day trend line, still above the weekly. We see the price percent oscillator heading down, still positive. Derivative oscillator losing momentum. So things are getting a little bit weaker. We go to that 4-hour chart, and of course we see where things, they appear to have bottomed after a big drop in the morning. And again, these are our Heiken Ashi candlesticks, and we got a green spinning top, means lots of indecision, tending up there at the end of the day. But again, not so strong on the S&P 500. Again, if we had some strong moves take over before that 2-day chart crosses over going down, that would be great, friends. Hasn't happened yet. We shall wait and see what the market does for us. Again, remember, we don't call the market. The market calls us. It tells us what to do. Okay, going to go back to the weekly chart. Take a look at the Qs, NASDAQ 100. Again, going into the second week of up movement, moving higher this week, both in candle and wick. However, we again can see some price lag there. Price percent oscillator's weaker than the prior week. Derivative oscillator still oscillating upward, which is good for a continued up movement. But as we take a look at the 2-day chart, we can see that we ended with a doji, means lots and lots of indecision. Red doji, so tending down. Price percent oscillator is a little more than flat. It's actually heading down a little bit. And the derivative oscillator is also continuing to lose momentum. And what happened throughout the course of the day? Now, again, the Qs was up also just barely, 0.11%. Down in the morning, a little bit of recovery. Green spinning top means indecision tending up in the afternoon. So again, derivative oscillator gaining downward momentum. Price percent oscillator not going down at the same momentum it had. So keep your eye on things. If all of a sudden during the day on Friday things boomed up in the morning, might give you a jumping in point in the afternoon. Not likely, but it's possible. Maybe something you keep in mind over the course of the next week. Okay, we're going to go to 20-year bonds. They're going into their second week of red spinning top, means indecision tending down, more decisive than a doji. We see that the price percent oscillator will not cross over going down. Derivative oscillators continuing to lose upward momentum. We look at the 2-day chart, and we see this latest 2-day candle is pushed through the down trend line on the 2-day chart and is trying to gain some momentum and upward push. No down wick on this one. So again, that's all right for some potential up movement, but a ways to go before you have a crossover and any hope of jumping into an up movement on the 2-day chart, which would then allow you to jump into an up move because the weekly's already up. The opposite, of course, is true. If the 2-day pulled the weekly over going down, we don't have that right now. So we'll see how things continue to shake out in bonds. And again, if it's not ready to pop, it's not ready to pop. We're going to be patient. Our trick is to win. The trick is to win, my friends. Okay, lastly, we go to gold. Now, I do want to start not on the 4-hour chart, but on the weekly chart. And of course, we had that weekly vertical crossover in gold all the way back on the 7th of June. And we have had up weeks, but for one pullback after the prior super huge up week ending the 28th of June. First week in July was a pullback. Now it looks like things are trying to start up in earnest. And what's beautiful is throughout the course of the day, we saw things reach a high all the way up to $136.63, blowing through that 135.50 mark or so. That was nice. We can see that the price percent oscillator is ticking up. The derivative oscillators losing some momentum, but barely. We go from the weekly to the 2-day. What do we see there? Well, on the 2-day chart, we can see this latest 2-day candle is significant in that it is a green open box candle with a long wick on top, significant price upward movement. And of course, that is valuable. Why? Because the 2-day and the weekly are in confirmed up moves. So we see this latest 2-day chart really moving up quite strongly, which is nice, bouncing off the red signal line. Derivative oscillator still negative. I'd like it to be positive, but it's not yet, still gaining downward momentum. That's because of the sideways slide and some of that downward pressure, particularly from the strong red down candle back ending, representing basically Friday the 5th and Monday the 8th of July. So we do have a nice big green up candle, and of course, what do we tell you to look for? We had a crossover that occurred in the afternoon on Wednesday. We had a jumping in point this afternoon, and the opening somewhere around 134.04 and a high of 136.63. Not bad. And again, we're using the Heikin Ashi candlesticks to call that opening at noon, which is give me a break on that. But again, jumping in point was either late morning or early afternoon, and I sure hope you pulled the trigger on a practice trade. If you didn't pull the trigger earlier, I know some of you are really itching to get in and going down to that 2-day chart looking for any excuse at all. And I don't mind any excuse if you can justify it and duplicate it again and again and again. If not, you're gambling, and that does not count, my friends. That is stupid because the market takes all the money from gamblers. We do have a good training for you today. The training, again, we put these in every single day for all of our friends, and it is one on learning a reliable system for investing and basically pulling money out of the market. We want you to have a virtual printing press, and if you will stick with this, how long will it take you? It might take you many months. It might take you years and years. But as Musashi tells us, if you make it your life's work, you will reap the reward. But if you are one of those that think you can just listen, take a few courses, listen to these guys online that are going to charge you thousands of dollars for some quick little tip that is going to make you millions, do you think they would be teaching you that if it worked? No, they wouldn't. They wouldn't be teaching you that. And why are they charging you so much money? Again, folks, what you need to do is learn sound principles of how to read charts, practice, set your goals, and work every day 10 to 15 minutes. That's all we ask. Not hours, because you won't keep up with hours. I'm afraid most people won't keep up with just a few minutes a day. But if you will do that every day, there's no excuse. I'm sick plenty of times when I do this show. I have a lot of other things than to do this show for free every day for you, and it's also for me, because I'm telling you, there's nothing like teaching. I learned that when I taught law. I was a professor many years ago teaching law, and I learned so much more law teaching law. And then I thought, I really want to learn investing. Years of practice and training, all sorts of courses. And then I said, I'm going to start teaching what I know. I'm going to improve, and I'm going to share the knowledge with other people. So this is for you. It's also for me. If you haven't purchased our book, you can do so. See the link in the show notes. If you've not signed up for our daily market review, you do that for free. You just go to chartingwealth.com, put in your name, email address, and boom, that's where you get that's where you get all the special training too. It's only uploaded in the emails that go out to all of our friends, and that's free. And again, see the link in the show notes for the book. And if you want to be a Patreon supporter, we really appreciate those guys. All sorts of special treats, plus a monthly Q&A live session with me. And we ask you to send us your ETFs and stocks you'd like us to review for you on a monthly basis, and we'll take a look at those and prepare that for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.